Hey everyone, in today's video I'm going to be going over everything that you need to know to start being able to invest into a Roth IRA. What exactly is a Roth IRA? A Roth IRA is an individual retirement account or IRA where you pay taxes on your contribution to the account and all future withdrawals from that account are tax-free. Although your investments are tax-free, there are some caveats with this. Because it's a retirement account, you're only able to pull out your money after you're 59 and a half years old. But that is just gains. Any contribution you make to this account, because it's already paid off in taxes, that money can be pulled out whenever you need. So it's just the gains on your money that you make that you have to wait until you're 59 and a half years old. If you do, for whatever reason, pull your money out before this, it's about a 10% withdrawal penalty, as well as you will have to pay taxes on those gains. Who exactly is a Roth IRA for? Roth IRAs are best suited for people that are looking to retire when they're older and who assume that they're going to be in a higher income tax bracket when they do retire. Because the higher your income, the bigger the tax bracket you become in, so being able to avoid that with the tax-free account like the Roth IRA is a great thing to have. So how much can you invest into a Roth IRA per year? Now at the time of this recording in 2023, the maximum contribution limit per year is $6,500. Now this is different from last year as it was only $6,000. If you are 50 years or older, you are able to invest $7,500, and this is almost like a catch-up where the government's allowing you to put in more money to help plan for your retirement, which is coming up. Because some of these values have changed year over year, it's important to do your research if you are watching this video in the future, just to make sure you know exactly how much you can invest per year. Now another thing to bring up is that there is a maximum income limit you can be to being able to invest in a Roth IRA. For singles, it's $153,000. And for people filing jointly, like they're married, it's $228,000. After you surpass these limits, you cannot invest into a Roth IRA anymore, but the good news is that any contributions you made before you got to that income limit is still in the Roth IRA, and you can still make money and withdraw that money. So what type of investments can be in a Roth IRA? It's important to note that a Roth IRA is not an investment in itself, but rather it's an account, so you still have to find good investments that you can choose to put into this account. Don't let your money just sit in this account. Be sure to diversify and invest it so you can reap the rewards when you do retire. If you don't invest your money, you'll just be losing to inflation over time. So some investments that I recommend are stocks like high growth or high dividend yield stocks, bonds that have a high interest rate on them, ETFs, which are a basket of securities that offer lots of diversifications with them, and real estate investment trusts, which are companies that own, operate, and finance income-producing real estate that offer lots of dividends to their shareholders. You want income-producing investments in these Roth IRAs so you can take full advantage of compound interest when you do retire. And these four are great starter points to look at to begin to look at what to put into your Roth IRA. What are the best places for a Roth IRA? There are many different brokerages that you could choose to put your Roth IRA in. You should find one that best suits your own investment needs, has good reputations, and is very reliable. Some brokerages that you could start to look at are Fidelity, Vanguard, Charles Schwab, and Merrill Edge. These ones are good starter points, so you can begin to look at what brokerage you should choose. And another tip is if you are going to choose these brokerages, make sure you know actually how to invest with them because lots of brokerages change on their investment strategies. So just make sure you know exactly how you put your money in and how you can actually buy stocks or any other investments with them. Now there is a lot of confusion between a Roth IRA and a traditional IRA or 401k. The main difference is when you pull your money out, a Roth IRA is tax-free, whereas a 401k or a traditional IRA is tax-deferred. So you still have to pay taxes on these, they're just pushed out to a later date. Now another cool thing about a Roth IRA is that there is no age limit to open an account. You don't have to be 18 to have a Roth IRA, so you can even have ones for your kids. And the quicker the better to start because you want compound interest to take effect. Now I'm going to hop into my computer and show you exactly what I mean on how compound interest can greatly impact a Roth IRA. So this is a Roth IRA calculator that you can use, and I'll have this linked in the description below for you to check out. And we can kind of see the difference between how much you can make if you have a Roth IRA versus a taxable account. So if you come to the starting balance, it'll just be zero because you're just starting out. And then for how old you are, I'm just going to say 30, so you can kind of see the difference that compound interest has. $6,500 for the annual contribution, because that's for 2023, that's the max you can put in. and then just 65 with a 7% return. And then if you just come to maximize contribution, it'll just tell you you're going to be maximizing your Roth IRA every year. So it'll be $6,500 per year every year until you're 65. So we'll just click yes on that. And then just calculate. And then you can see that the IRA balance is just above $1 million. And then if you come to the graph, the green line is going to be the taxable account, which ends at $713,000. And then the Roth IRA is at $1 million. So it's almost a $300,000 difference between these two accounts. Now here's when you can actually see compound interest really take effect. If you did not start when you're 30, and let's say you started at 18, we can see that your Roth IRA goes up drastically to 2.5 million, which is right up here, 2.5, and then that taxable account is 1.4 million. Now keep in mind that this is with a 7% expected rate of return. The market may not be up that much every year, but this is just an average and kind of just to see what you could expect with this compound interest. And that is about everything that you need to know to start making a Roth IRA. Please remember that lots of this data may be subject to change, such as the income limit or the monthly contributions, so make sure you do your own research before you actually start, if you are watching this in a later date. Thank you for watching. If you did enjoy this video, I made another whole video on just the effects that compound interest could have on accounts like a Roth IRA. That's it for now, and I'll see you in the next one.